Sam Altman runs a $500 billion company, and despite this, he has never held down a real job. So how do you define a real job? A real job is working for someone else. It's climbing from individual contributor to manager to director up the corporate ladder. It's managing a business line that you didn't create. It's writing reports for your boss, and it's punching a time clock. It's also on a bad day getting fired or laid off and having to search another job because work isn't an option, it's a necessity. Real jobs are what people like you and I have. But Sam, in his adult life, has never had one. Since the age of 19, he's been a founder, he's been an investor, and now a figurehead, but never a real job. And I want to be clear, this is not a hit piece on ambition. Instead, it's a pattern recognition exercise on how Silicon Valley mass produces these leaders and dupes the public into thinking that they're competent or even qualified to make decisions for people like you and I. Just like in the Elon video, you can go back and watch that posted last week. We're going to trace the line of Sam Altman's career from the time he dropped out of Stanford all the way up to present day. And my aim is to show you that this is not some serendipitous come up that was architected by some genius, which is what the media wants us to believe, is that people like Sam Altman are geniuses. We are just too dumb to do it. He is special. He is gifted. He's nothing like us. He's this untouchable, incredible intellect. And that's clearly not so. When you start to look at the through line of his entire career, you start to see that this is actually just a very expensive game of musical chairs. Let's start with college. So Sam goes to Stanford at the age of 18, and he drops out after just 1 year. He founds this location sharing app company called Loopt, Loopt. And keep in mind, if the dated name was not a clue, this is in 2005. And they raised somewhere between $30 and $39 million in capital, which is a good start, but just 7 years later, they sell the company for $43 million, which was a negative return for his investors. Obviously, at that point, you'd take out $39 million and you grow it to $43 million after 7 years. That's barely keeping up with inflation, and it's certainly not keeping up with just investing that money in an ETF. So it's basically a wash to a slight decline in the value of the company over 7 years. He co-founded Loop with two other individuals. One was his boyfriend, Nick Sivo, also Alec Deshpande. They were part of the first Y Combinator cohort. That's the same group that Reddit was in. And if you don't know, I'll do another video on it. Drop a comment if you're interested. Y Combinator is basically a kingmaker in the Valley. It's a startup accelerator. And the way that they are massively successful now, they had a few initial hits. They got their money going. They got their prestige going. And the way that they're successful now is that they're able to connect other portfolio companies in Y Combinator that are alums with existing ones, so they can sort of give people a leg up through that very elite network. So they do Y Combinator, and then they raise between 30 and 39 million from Sequoia Capital, NEA, and others. At peak, the company is valued at 175 million, but the daily active users started to dwindle, and Sam Altman himself says, quote, "I learned you can't make humans do something they don't want to do." Let's just keep that at the back of our mind as we segue into OpenAI later, making humans do something they don't want to do. Perhaps a deeply held fantasy for Sam Altman. They were sold to Green Dot Corporation in 2012 for $43.4 million, of which $9.8 million was employee retention. So the net to investors was roughly break even or a loss. And this is something that happens in the Valley quite a bit. You have, let's say, two companies in your portfolio. They're working on kind of similar related product spaces. So, you got a location sharing company that's maybe for social, and then some other, location sharing company for enterprise, let's say. And the enterprise one is doing, pretty well, and the social one is starting to dwindle. You still have a lot of talent over here that's very familiar with the space, right? They've been working on location sharing problems and all the building blocks that make up that problem space. So you have a bunch of talented engineers, product people, et cetera, that know the space. So instead of just losing those people and letting that company go out of business, what you might do is you might, warm intro between enterprise location sharing company and personal location sharing company. And you might say, hey, enterprise is going to buy you out for this much. They'll acquire all of your employees and retain the right people there. And then we can grow our other company faster with basically like pre-vetted talent. So this is a pretty common thing to do. If we dig a little bit deeper, we find this really juicy tidbit from Helen Toner, who's a former OpenAI board member. And she revealed that Loopt's management team went to the board 2 times and asked them to fire Sam for, quote, deceptive and chaotic behavior. We'll see this as a theme as we go through his other positions. I won't call them jobs. So Sam walked away, quote, pretty unhappy, per the outlet Intelligencer. But somehow he pocketed enough from the sale to start his own venture capital firm. Reportedly, he took about $5 million after he left the company, which really boggles the mind because essentially here's the crazy shell game that you have going on. You have a startup that's founded. It goes on for 7 years. Daily active users start to dwindle. People aren't really using it. They're then sold to another company at either a wash or a slight loss. So he didn't improve the valuation of the company between when it was founded and its exit. He didn't actually grow it at all or make it more valuable. And somehow he walks away with $5 million. So this is a 7-year failure story of a company that he slowly ran into the ground, couldn't pivot to something useful, couldn't grow the value of. And then he got a soft landing with a $5 million take after leaving somehow. And the only reason he got that is because the very investment firm that was losing money on Loopt, on his startup, negotiated an acquisition with another one of their portfolio companies. So what do you do after you fail a startup and you lose a bunch of venture capital money that isn't yours? You start your own venture capital firm. And that's exactly what Sam did. He kicked in some of his $5 million, but most of the money was actually from Peter Thiel to start his venture capital firm. Furthermore, he wanted to keep it in the family, keep it kind of incestuous, and decided about 75% of it would be invested in companies coming out of Y Combinator, that startup incubator that he's very closely involved in. And so this is April 2012. He co-founds Hydrazine Capital with his brother, Jack Altman. It's a $21 million initial fund to start off with. Some of his money kicked in. We don't know how much, but primarily that's being funded by Peter Thiel, his friend and mentor. And if you have been in tech for a little while, or if you're around my age, you would know that 2012, it was virtually impossible to move to the Valley and found a startup that would not catch fire. I mean, I don't want to say virtually impossible, but it is easy to start a startup at this time. Money is flowing, investors are happy to invest, and SaaS products are just easy to build. This is like a golden era for Bay Area startup tech. And so they have a few good plays because when you're playing a lottery where the win rate is 50%, you're probably going to get a good payout. And so they are early investors in Airbnb. They invest just $100K, but it turns into massive returns later on. They invest $100K in Uber and Reddit. They buy 12.2 million shares. They invest in Stripe and Instacart as well, all virtually household names at this point that blow up, that 10x or 100x. And so sneak peek at the future in 2024, Bloomberg puts him on the billionaires index and pegs him around $2 billion, quote, primarily from his venture capital funds related to Hydrazine Capital. So all the while, what Sam is doing is he's, going around Y Combinator, he's getting warm intros to other startups, and he's not building anything. He's not a builder. He doesn't make anything. He merely finds himself in these rooms where somebody else who actually has talent is making something valuable, and he says, here's $100K, put my name on the cap table. In 2014, Paul Graham, the co-founder of Y Combinator, picks Sam to be his successor as president of that enterprise. There was no search, no list of candidates, and according to the co-founder, Jessica Livingston, she said, quote, it was simply Sam. Paul Graham has a well-known quote about Sam Altman that we should also put back there in the back of our heads as we consider the facts on him. And it's a chilling quote. It's a chilling quote, especially now. It's prescient for the time that he made the quote. And it's this: Sam is extremely good at becoming powerful. Sam is extremely good at becoming powerful. That's the truth, for better or worse. And so in 2014, when he's named president, he is just 28 years old. He ran it for 5 years, and during that time, Y Combinator companies included Airbnb, Dropbox, Stripe, DoorDash. But remember, Altman didn't build any of these companies. So after doing this for 5 years, it's 2019, and the Washington Post actually reported that he was, quote, asked to leave for prioritizing personal goals over the company. Helen Toner went so far as to say he was fired. Paul Graham has disputed this on Twitter, so we'll probably likely never get the real story, but there is some flag on the play there. And regardless of what you believe, there's some doubt with all of these companies in his departure and the conditions surrounding his departure. So you have three companies, just three companies, not real jobs, that he's been in the leadership position for, and they are all disputed or forced departures, which is very strange, very strange. And this is an anecdotal thing, but I have worked a lot of jobs. I don't know how many jobs, but I've been working since I was 14 when I was being paid under the table as a janitor at a trucking company. I've held a lot of jobs since then. I have only been fired from one of them, and that was in college. But really, post-college, my entire professional career, I've left on fine to good terms with every company I've been at. And I don't think I'm an exceptional employee or different or stand out from the norm. I think I'm just kind of an average employee, and I'm not an a-hole. You probably have the same experience. Maybe you've been laid off or something, which is more of a corporate decision, but maybe you've been fired, but it's probably not a pattern, right? Like there's probably not these disputed departures on your job history. But Sam has only held 3 quote-unquote jobs in his professional life, and each of them he's left in a disputed or kind of flag-on-the-play way. So something's up there. In 2015, Sam Altman co-founded a nonprofit whose stated mission was to build artificial general intelligence for, quote, the benefit of all humanity. 10 years later, that nonprofit is now a $500 billion for-profit company. The original profit caps have been removed, and Altman now sits on both the nonprofit board and the for-profit board, which we'll get into a little bit later. But don't worry, he only makes $76,000 a year. So he's got power player co-founders in 2015, Musk, Peter Thiel, and Brockman. They start off with a noble goal. Their original goal is to make open source AI that is to compete with what Google is developing as part of their DeepMind laboratory. Google intended to keep their AI closed source, and so OpenAI was founded to do AI research and make models available to the public that were open source. It's interesting that in 2018, Musk departed after a conflict with Altman over control and direction. And you'll see this very often. If you've ever worked with a narcissist or a sociopath, they don't work well with other people, but when they can control other people, they can survive for quite a lot of time and actually be fairly successful in certain roles, like being a CEO. What cannot happen, though, is two narcissists cannot work as peers. They cannot do it. It will never work. It will always end in fireworks. And that's exactly what you have happening here. You saw my other video on Musk earlier in the week. Now I'm talking about Sam Altman's track record, and you're starting to see the picture. You have two extremely narcissistic individuals. They are co-founders. It is a recipe for disaster. So Musk actually departs the company. And if Musk thinks somebody is insufferable, oh man, that is a high bar. So you know it's bad when he dips out. So then in 2019, Sam and the rest of the OpenAI leadership is like, I gotta figure out a way to make money on this. And so they create a capped profit subsidiary. Investors warned that they should, quote, think of investments in the spirit of donations. It's all altruistic, right? But then the money comes along and money changes people. Microsoft comes along offering $13 billion to kick into OpenAI. Things really accelerate around November 2022 when ChatGPT is launched and the company explodes to hundreds of millions of users. There's even controversy around the loss because according to Helen Toner, the board, quote, learned about it on Twitter, speaking of ChatGPT. So essentially, Sam got this product together, got it developed, and then launched it without telling the board anything. And this guy really has his finger in everything. He didn't disclose to the board that he owned the OpenAI startup fund. He owns 75% plus of this fund, despite the fact that he claimed to be, quote, an independent board member with no financial interest. So it's a lot of bad behavior, right? And you need to control the narrative around this. You need to make sure that there aren't whistleblowers, there aren't disgruntled employees that are going to go around talking about the company. And so what he does is he has any departing employee sign a non-disparagement agreement. So basically what that means is you can leave OpenAI, this company that, you've had a lot of your pay in options. Like maybe you earn like a $200K base salary, which I know sounds awesome, but in the Bay, it's really not that much. And then a lot of your compensation is in stock options. These stock options are private, but once they go public, if the company becomes a unicorn like OpenAI, you will never have to work again. Instead of allowing his employees to keep those options, he has them sign a non-disparagement clause, which basically says, after you leave the company, we will take your options back if you say anything bad about us. So it's a gag order, basically, holding their money hostage that they've worked for, that they have earned. Since then, Altman has claimed that he was unaware about the non-disparagement clause, but he's widely accused of lying. Drama comes around in 2023. The board fires Altman. He finds out like 5 to 10 minutes before it's made a public announcement via a Google Meet while allegedly watching the Las Vegas Grand Prix, probably from some super swanky penthouse. Here's where we get another little peek behind the mask of Sam Altman. Why was he fired by the board? It's because 2 executives had come to the board with allegations of, quote, psychological abuse, providing screenshots of, quote, lying and being manipulative in different situations. So now there you have it in plain writing. And for what it's worth, the board takes this seriously enough to oust him. So this is not just an idle claim from a couple of disgruntled employees. The board must see some truth in this. Otherwise, they would just dismiss it and fire those people and get HR involved and protect the company. So it's kind of weird at the executive level, at that kind of ruling class, giga elite level. If you're in that position, you're going to be ousted by the board. You probably get a heads up. You get some time to get your affairs in order. You negotiate some parachute in terms of like a buyout or a huge pay package so you don't have to work for like 5 or 10 years or ever again. Usually you get some heads up notice on that. It's not just so sudden. But he finds out, like I said, Las Vegas Grand Prix, like 5 to 10 minutes before they go public on this over a Google Meet, which is very strange for this situation. And so why do they do that? They fired him in secret because, quote, they knew the CEO would try to undermine them. So again, the board is on board with these complaints. They're like, obviously, he's a manipulator. He's a toxic person. Somehow things get even stranger because just 5 days later, Sam Altman rejoins the company. And the media got this real wrong. If you watch the media coverage on this, they got it so wrong. And I'll tell you the narrative that they put out and then what actually happened. So they reported, factually, this is the truth. 95% of employees signed a letter to reinstate Sam. But it doesn't get into why they signed that letter. Let me break it down for you, okay? So you are a software engineer at OpenAI. You're earning $200K base, which, like I said, sounds like a lot, but in the Bay, it is not a lot compared to your other options out there in tech. So you're earning $200K base. And then let's say at this point, your options are worth $5 million, let's say. And if you're good enough to get into OpenAI, you've decided to not go to Google, where you could have been making $500,000 a year, probably $250K in base, $250K in stocks, but that $250K in stocks from Google, you could sell those stocks immediately as they're granted and turn that into real paper money that you can sniff, hold, taste, whatever. But at OpenAI, you're earning way more. You're probably working 80 hours a week easily. It is a grind shop all the time. Now it is, and it was back then too. You're working insane hours, no friends, no family, no social life, because you're earning $200K, which is under market for you as a software engineer, but you have like $5 million in paper money as soon as this company goes public. And now the guy who is going to take you public, the con man in chief, the figurehead of your company, has been ousted. And so the narrative inside of the company becomes fear that if this guy doesn't come back, my $5 million that I have worked my dick off for, worth nothing. I have wasted my time here. So of course they signed the letter. In the media, it makes me sick. They portray this like Sam is some kind of a folk hero and they love him and it's by popular demand, and it's totally not, because I've been in the situation where I've had equity before, meaningful equity. And you want that company to go public, because otherwise it begs the question, why did you go work at a company that isn't going to pay you something that you can cash out in real time? So of course they sign it. And I'll tell you one other extenuating factor too that we know from OpenAI documents is that one of the things startups will do if they're doing real well, like they're trending towards IPO, stock value has gone way up, is they'll have something called a tender offer. And so a tender offer, put very simply, is, let's say at OpenAI, that 5 million of stock options that you have, the company will arrange every so often a tender offer for external investors, some pre-approved group of venture capitalists, to privately buy those options from employees that are holding on to them. So even if you don't make it all the way to IPO, you can cash out on some of those options by a private party sale to venture capital or whatever investment firm the company is working with. When they sign that letter, there was a tender offer just months away. So basically their dude is out. It's going to F their stock price. And so their $5 million, maybe overnight it's worth like 2.5. Like, how is this going to affect their valuation that there's trouble in the home with Sam? So of course they sign the letter. If they don't sign the letter, they might be out millions of dollars. I would sign that letter. So there's some restructuring there. There's some juiciness, but I'm just going to glaze over it. Suffice to say, he's back at OpenAI. There's a little bit of restructuring around the nonprofit versus the profit side of the business, where they pivot to be a for-profit company. But what I'm more interested in covering is Sam Altman's side hustle. You see, while he is busy running the most important company in the world, according to him, somehow he has time to work on side projects. And this is crazy to me, because if you're a software engineer, you are working 80 plus hours a week at OpenAI just to make the company richer, to line your own pockets too, but the lion's share is going to the company. And with that 80 hours a week, like I said, there is no family, there's no friends. You're stressed all the time. You're getting paged in the middle of the night for support issues. It's high intensity. You do not have time or energy for a side project. But Sam is just built different than you, right? I mean, you are a plebeian, a commoner, and Sam is of the kingly royal class. And so he is elite, and he can have side hustles, because remember, he's a genius. He's just like Elon, they're geniuses, and they're far smarter than you and I are. So he's not going to stop there. Sam, he can do 10 to 20 hours at OpenAI a week and go appear on Tucker Carlson and a couple of other scripted news outlets to get his talking points out. And then he's done his OpenAI work. That's as good as some idiot like you or I doing 80 hours of work a week. And so he founds a company on the side, and it's a cryptocurrency project that pays people in developing companies, get this, to let a basketball-sized metal orb scan their eyeballs. And somehow that's not even the weirdest part of this. So in 2019, he co-founds a company called World, formerly Worldcoin, with Alex Blania. And the pitch, this is so messed up, is, quote, proof of personhood via iris scanning. So you get a digital ID and then you get World tokens, which is a cryptocurrency. So give me your biometric data so that I can identify you and nobody can spoof your identity, and I will give you imaginary money. That's the con here. Luckily, there's at least a few countries that still believe in freedom and privacy. So the company is investigated, or banned in 14 plus countries on 3 different continents. So you got Spain, Kenya, Hong Kong, Brazil, all suspended operations. They said, no, you will not be scanning the biometric data of our people to create a database for God knows what purpose. Even MIT Technology Review, which is typically the PR wing of the tech elite in America, accused it of, quote, deceptive marketing techniques used to build a biometric database. Yeah, no shit. They're not scanning irises just for research. And the Berlin bros were particularly based when they tried to roll this out in Berlin. There were fistfights at scanning stations, and criminal groups, get this, paid homeless people and refugees to get their eyes scanned and then kick the crypto back to them, which is like, good on them for conning the con man. It's estimated that one group running this scam may have raked in over $700,000 in world tokens. So Germany continues down this thread. They order that World deletes the biometric data that they've taken over GDPR violations. Argentina also fined the project $200,000, which is kind of cute. That's like, maybe what you'd tip the valet if you're a company of that size. Furthermore, they scanned minors in multiple countries without consent. So how is World Token doing these days? It's down 75% from peak. And even in Altman's own words, he admits the orbs have, quote, a clear ick factor. So this is a disturbing one to watch. I don't want to make too much of a point out of it. Worldcoin could probably be its own dedicated video, but he's working on something on the side because, again, he's a genius and he can get the time to do that. And not only is the thing that he's working on the side creepy, it is building some biometric database of people to create non-forgeable IDs for people, which is, again, who knows what this is being used for, but doesn't sound altruistic to me. When you line up every chapter in Sam Altman's career, from Loopt to Hydrazine to OpenAI to World, the same pattern repeats. Somebody else builds the thing, somebody else pays for the scaling of that company, and then Sam puts himself in the center of the narrative as if he was the one that did everything. Sam has never written production code at scale. He's never managed a P&L he didn't create. He's never climbed a corporate ladder. He's never been an IC, and he's never been an employee. Across the three organizations he's been involved in, he's been accused of deceptive, manipulative, or toxic behavior and ousted from those companies, sometimes successfully, sometimes not. And he's now rewarded with running a company of tens of thousands of employees, despite the fact that he has never been an employee himself. He's never actually worked inside of a company with any real scale. The man is making some of the most consequential and long-lasting, impactful decisions about one of the most important technologies of our time. And he's proven time and time again that when guardrails are put up to stop him from doing something unethical or dangerous, he finds a way to go around those guardrails and get his own way. Is that who we want governing artificial intelligence? A guy who has never been accountable to anyone. Thank you so much for watching. Please remember to like and subscribe this video, and please help us scale the channel. Share this on social media, on Reddit, on X, wherever you like to hang out. Help get the word out about this channel. We got to get this information out there. Thank you so much for watching.